Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Thursday, the 17th of February. Starting off with Ben's Creek, which has been a bit of a favourite since it came to market at 10 pence back in October. Currently at 4.5 times that value and still progressing within that rising trend channel from the end of last year. The highlight here, I suppose, over the course of February is that step fashion. So we're getting the shares basically finding support at or above old resistance, sideways flow and then up again. So 60 pence looks pretty well nailed on maybe as soon as the end of next month, and that's valid while we hold above the 42 pence level, which is the October uptrend line on the daily chart. Moving along to a stock which has had a good year so far in 2022, Blue Star Capital, after taking about a long time to get its act together. Here we've got what could be a broadening triangle ascent. Current situation is we've been finding support at and above the sharply rising 50-day moving average. That suggests that support will come in at least at the 0.4 pence level. Obviously, we could retest the January resistance area towards 0.6, but maybe on a 2 to 3 month, we have the chance here of 0.8 or 0.9, which obviously would cheer up fans of the shares. But the ideal scenario is that we hold support around the 0.4 level and head back towards the highs. Cobra has been one of the better movers in the last few days, and that seems to be continuing. We had that mid-move consolidation, and also we had that unfilled gap to the upside of support, which tends to be a very strong signal, and it's proved to be the case here. Also bullish divergence in the RSI window, so the lower low was not met by a lower RSI trace, so that is pretty cool. Moving on to, in terms of where we could head up to, the old July resistance around 2.1 pence, above that looking for 3 pence at the top of an April broadening triangle from early last year, so looking pretty set fair there. The only issue, I suppose, is the volatility. Yesterday was rather a rocky ride intraday, but looks like we've cleared that away. On to Eco Atlantic, where we've actually, I suppose we just about hit that broadening triangle target, which was at 37.5 pence, so just shy of that at the moment, but looking to hit that pretty soon, maybe over the next 24 hours, something like that. In terms of where the shares may go next, I think we're looking at something like the line I'm drawing here, so another sharply rising trend line, and that's heading towards 50 pence, that line from back in August. So breaking 37.5, we could get 50 for Eco Atlantic over the near term. The other plus point to note, which is quite significant, is that we're just about a day or two away from a golden cross between the 50 and 200-day moving averages. They're both rising at the moment. The run up to that tends to be the strongest part in the cycle, and obviously we're already seeing that with the recent unfilled gap to the upside that the shares have delivered. But it looks as though 50 pence is not an optimistic target for the end of next month or even sooner. Onto a stock I covered a couple of days ago, but seems to be making some progress here. Bit of a punchy call to suggest that the bear run in the Gfinity is over, but we're holding above the 200-day moving average at 3.3 pence, and above that looking for 4.1, something like that, which was January resistance. I think that wouldn't be too optimistic to go for that over the next 2 to 4 weeks. Big picture target maybe by March, April time, or maybe April time, up to 5.5 pence at the top of that June broadening triangle. Onto a stock which I know has legions of fans, Global Petroleum. Here we overshot the old resistance, so 0.7. We took it down to 0.6, which would have cleared out, I would have thought, the weak hands quite successfully. View now is that still, while we're above 0.7, we should head up towards a line of resistance there from back in March last year, heading towards 1.3 pence maybe by the end of next month, something like that, if I can get the chart to work properly. I suppose if you're less optimistic, which some people might be, then the target here around 1.1 pence at that April resistance line. But looks like it's a sort of third time lucky for the taking up the slack in this stock over the near term. Stock which I haven't looked at as much as I might have liked to is Harvest Minerals. Here we've got a situation where the shares have made decent progress since the summer, and it looks as though they're heading towards the 10 pence level at that April resistance line projection. That's valid while we hold above recent resistance, the mid-January resistance at 6.25, so above 6.25. Looking for 10 pence maybe by the end of next month, something like that. Another uptrending stock is Hurricane. And here we've had a decent breakout over the last, well, I suppose this week really. Rising trend channel there from back in March last year, heading towards as high as 8.5 pence, and that could be seen by the end of next month, especially while we hold above 5.35 pence, which was the late January resistance. But nice to see the 50 and 200-day moving averages both rising there quite strongly, and that should provide positive momentum. After being something of a disappointment, let's say, over the recent past, Nkondesi has had 2 good days in a row, which is a result, I suppose, after the extended decline that we've seen. What will be interesting now is whether the shares can hold around the 0.65 pence level, which was a resistance on the way down back in January. Above that, we're looking for, I suppose, at least 1.3 pence, which is post-November resistance. So a bit more on the upside there, and possibly much more if there's something fundamental to back this. So 1.8, the 200-day line, would be the ideal scenario by the end of next month if we can hold above the 50-day line over the next day or two. That's at 3/4 of a penny. Just 4 situations to go next. First is Petra, which has broken out this week quite nicely, even broken out through the old July peak at 96 pence. Decent weekly close above that, and we should be heading towards £1.20, which is the top of a rising trend channel from this time last year. The 50 and 200-day moving average is also just about to deliver a golden cross buy signal, so that also adds a bit of momentum to the situation. Sareum was a favourite, I suppose, at the mid part of last year, but since then it's been rather painful in terms of the decline that we've had back from 9p to 3p, but typical of what you see in the small caps. Broken a line of resistance at 4 pence today and yesterday, and while we're above that, looking for a retest of the 200-day moving average at 5 3/4 pence, hopefully by the end of this month. That takes us back to December resistance for the shares. But the bullish divergence line there in the RSI window from November suggests that there could be a lasting turn, especially as we bear trapped from below that old November floor at around 3.1 pence, so above 3.1. We're looking pretty good for Sareum. Stock which I've never covered before and may never do again is Unbound Group, but here's a chance of a bear trap, also bullish divergence in the RSI window. Obviously, one doesn't normally like trying to catch falling knives, but break of that January resistance line at 54 pence could at least take the shares up back to the 50-day line at 63, and then maybe that would snap the downtrend in the shares. Last stock of the day is was one of the best performers of last year, Valerium. Here you can see it seems to be primed for a breakout. We've had a lot of consolidation here from the June highs near 80 pence, but at the moment we've got the 200-day line rising, and the next time the 50 and 200-day lines cross, it would be a golden cross. The level to break at the moment around 40 pence. Obviously, this would be one sort of 4th or 5th time lucky for the shares to try and break that line of resistance from June, but as in the case of Extract, once they go, these resistance lines, 6 month plus resistance lines, then there tends to be a decent move. Initially above 40, looking for 60 at that October peak, maybe by the end of next month. I think that would be quite a generous time frame, given the setup that we have there at the moment. That's it from me today. More updates tomorrow.